What's going on, everyone? Welcome back to the Lunch Money Investing channel. Today, we're covering why my portfolio actually held up better than the broader market over the last few days, why AI spending somehow keeps accelerating despite all the volatility, the massive SpaceX acquisition making the rounds, how Micron is absolutely crushing earnings, Qualcomm's huge data center announcement, and finally, we'll get to the biggest economic report coming out this week. So let's jump straight into it. Now, jumping to the M1 Finance portfolio, that currently sits at $2,480. That's down 2.3% compared to this time last week. Now, at first glance, that doesn't sound particularly exciting, but context matters. During that exact same time period, the S&P 500 also fell 2.3%, while the Nasdaq dropped 2.64%. So, despite owning 2x and 3x leverage ETFs, Bitcoin exposure, growth stocks, and plenty of other volatile names, we basically matched the S&P while slightly outperforming the Nasdaq. And honestly, I'll take that. Since last week's update, I've invested another $154.60, bringing the total portfolio value even higher. Nothing flashy, no market timing, not trying to predict next week's headlines, just consistently buying quality assets day in and day out. Now let's look at where the performance actually came from over the last few days. The biggest surprise this week was the interest rate subprime. That finished up 1.4%, while our custom REIT allocation also had a phenomenal week, climbing 2.1%. Meanwhile, the biggest drag came from alternative assets. Crypto declined 6.5% and gold fell 5.3%. And honestly, that's exactly how diversification works. You never know what's going to lead next or what's going to drag it down. 6 months from now, Bitcoin could be carrying this entire portfolio. Earlier in the year, it was AI stocks. This week, it happened to be REITs and bonds. My job is not to predict which asset class is going to win every single week. My job is simply to make sure I'm invested when those winners decide to show up. That's investing. And now on to some developments on the corporate side. One theme keeps showing up over and over again. Companies are still spending enormous amounts of money on AI infrastructure. And this week, we got three more examples of this. The biggest headline, SpaceX. It has been less than 2 weeks since becoming a publicly traded company, and management is already making aggressive moves. They recently announced an agreement to acquire AI coding platform Cursor for $60 billion dollars in an all-stock transaction. If Cursor sounds familiar, there's a reason. Earlier this year, the two companies partnered together on AI model training using SpaceX's massive Colossus supercomputer. SpaceX originally had the option to pay a collaboration fee of $10 billion dollars or simply acquire the company outright. They clearly decided owning the technology made the most sense. At the same time, SpaceX also raised $25 billion dollars of unsecured bonds. Now, speaking of AI, Micron just confirmed the AI boom keeps booming. Micron reported earnings after the bell, and they absolutely blew the doors off expectations. The stock immediately surged around 13 to 14% after hours. Revenue for the third quarter came in at 41.46 billion, while adjusted earnings per share hit $25.11. Gross margins expanded to nearly 85%. These aren't just good numbers, these are extraordinary numbers. What's driving all of this? High bandwidth memory, or HBM. So you can think of HBM as the ultra fast memory that sits next to AI GPUs. Every time NVIDIA sells another AI accelerator, every time Microsoft builds another data center, every time OpenAI trains a larger model, someone has to supply that memory. And that's exactly where Micron sits in the AI technology stack. Now, one thing I always find funny during earnings season is how Wall Street reacts to guidance made by management. Analysts make a forecast, management makes a different forecast. Then everyone celebrates because management's guess is higher than everyone else's guess. I think the whole thing's kind of funny, but jokes aside, Micron's guidance today wasn't just slightly better, it absolutely crushed expectations. And that's why the market really blew up the stock today, because guidance tells us what management believes demand looks like going forward, not just what happened over the last quarter, but what's going to happen over the next quarter, 2 quarters, or even year. Now, Micron wasn't the only semi making news headlines today. Qualcomm stepped onto the stage and made it clear to the market it wants to be more involved in the AI arms race. During today's Investors Day, they dramatically increased their long-term outlook for non-handset revenue. They are now targeting 40 billion by fiscal 2029, almost double previous expectations. A major reason? Data centers. Qualcomm unveiled its new Dragonfly C1000 processor and announced Meta as an early customer. So let's think about what we're seeing. SpaceX is buying AI software companies, Micron can't produce memory chips fast enough, and Qualcomm wants a much larger share of data center spending. Different companies, Different industries, same story. The AI infrastructure build out is still happening. And based on this week's announcements, it doesn't appear to be slowing down anytime soon. So now turning over to macro data, tomorrow, Thursday, is probably the biggest macro day of the week. We'll get the latest PCE inflation report. This is the inflation measure the Federal Reserve watches more closely than CPI. It's a broader measure of inflation overall. If inflation comes in hotter than expected, expect elevated volatility. If it comes in cooler than expected, the market will probably breathe a sigh of relief. We'll also receive the final estimate for first quarter GDP. Normally, revisions don't move the markets very much, but given how sensitive investors have become to growth expectations, it's still worth watching, especially after the latest S&P Global Manufacturing Survey this week, which showed that job declines in the U.S. manufacturing sector are at the highest levels since the great financial crisis of 2009. Now, when I step back and look at this week, here's what stands out to me. The headlines were negative, markets sold off. Crypto struggled, gold struggled. But underneath the surface, companies are still investing billions into AI infrastructure. That long-term trend hasn't changed yet, and neither has my investing strategy. I don't build my portfolio around what I think will happen over the next 7 days or over the next month. I build it around where I think the world will be 5 or 10 years from now. So while everyone else is focused on tomorrow's volatility, I'll just keep buying. Those are my thoughts for this week's market update. As always, I'd love to hear what you think. Do you think the AI infrastructure boom is still in its early innings, or are we getting ahead of ourselves? Let me know what you think down in the comments. And if you found this video helpful or just interesting, please hit that like button and subscribe if you haven't already. And I'll see you in the next one. Until then, protect your lunch money. See ya.